You've got too many small businesses worried about tariffs. You've got too many immigrants who have fallen into my arms, concerned about going to school and going to work and going into courthouses, afraid each and every day. There are communities all across this state and this nation that have been silenced because of Trump. They're afraid. Businesses closing, all in Brooklyn, all up and down Flatbush Avenue. Little Haiti closed. People are afraid, and it should not be. This is a country where we stand up for liberties and justice and freedom, and he wants to take us back. Well, I don't know about you, I'm not going back. The White House is threatening our way of life in so many ways.
Let the bold with love each day take a stand throughout the land. Let my people say, if you're tired, if you're poor, let my people say, refugees flock to our shore. Let my people stay. Go back.
Go! Trump does not represent us.
No more pronouns, no more climate change obsession, no more emergency vaccine mandates, no more dudes in dresses. We're done with that shit.
The United States government will never default, that we will raise the debt ceiling, and Treasury will not use any gimmicks. We will make sure that the debt ceiling is raised.
Hey guys, Carlos here. Thanks for tuning in for another episode of Scriptures and Wall Street. For those of you that are getting on this channel, everything on this podcast is meant for information, education purposes only. And I just wanted to say that I appreciate you guys for following me for all these years and really supporting the show. I'm actually walking right now and watching the kids on the Power Wheel. They got a new little cyber truck. And that's what all this is about. It's about having the liberty to spend time with your family, to enjoy moments like this where you can be present as a father and enjoy the fruits of your labor and watching them just have a blast. So I just wanted to say what's up to everybody and start my weekly podcast with a little bit of family time, right? So I'm just walking around the neighborhood, enjoying. Say hi.
Hi.
That's what it's about, guys. Just spending time with the family and enjoying God's beautiful nature. And I can't really complain. So anyways, thanks to you guys for listening in. I am blessed to have this platform. I'm blessed to have you as a listener. Don't forget to like and subscribe our Rumble channel. All you got to do is go to rumble.com, Scriptures and Wall Street, and look us up there because we actually, not that I make a ton of money on that channel, but it helps us monetize so that one day we can be supportive by your generosity, your platform, or this platform, so that I can keep on podcasting. As you guys know, I've been doing this for 4 years. I said day one that I will continue to pay my own bill. I will self-sponsor. I will bring affiliates that believe in what we believe in, and I will not be bought out. And I've stayed true to my word. I've gotten a lot of heat. I've gotten a lot of comments on what people will say and think and all this crap. And let me tell you, for those of you that know, I've been offered big eight-figure deals to change my message. Like literally on the table right now. And I choose no. They said, Carlos, we like what you're saying, but is there a way that you can calm down and not say certain things about the LGBT community and not be so abrasive. Like literally, that's what they're telling me. And I'm sorry, I can't be inauthentic. I can't hide my feelings. It's part of who I am. I am in my own skin. I only want to do business with people that think like me and act like me, or that I can communicate with, that I can relate to. That's what it is. Call me conceited, call me arrogant, whatever your fluffy words are. Ask if I give a damn. But I will not have my integrity for sale. I received a client the other day said, well, Carlos, you got all these complaints from this crypto scam you did. Yeah, there was a crypto scam. I was involved. I made a mistake. I lost a lot of money, more than what people make in a year. I made a mistake. And my colleagues were like, some called me idiot. All good. I understand why. But they were telling me to basically file bankruptcy and create a new, form another LLC. Form another LLC. Walk away from your responsibilities. Walk away from your responsibilities. No, I'm not going to do that. Because I actually give a damn about people in their retirement. And I didn't get this. I didn't start this for the money. I started because I wanted to be an impact to people that love the cross, that love this country, that really, really need a plan, that really need help with their retirement. If I can do one thing on this earth and help people financially secure their retirement, I've done a good job. And I can talk about Jesus whenever I want. For those of you that know, my driveway project is still going down. So pretty bad, pretty bad. It's been almost 2 years in the making with HOA BS. But it's worth it because I get to see my kids scroll down on their Power Wheel. I'm so happy, man, seeing them. But yeah, if you broker check me, look me up. I was involved in a fraudulent, unbeknown to me, fraudulent scam that the money managers took all the money. The Bitcoin money managers. Come to find out, the Bitcoin money manager was a fraud himself. And it was a huge lesson learned. Obviously, but what they've done is elaborately, they catfish an actual real company that was certified through the, registered through the NFA. Real company, call and verified, everything checked out. And even someone like me, myself, we are victims as well. So you know what the safe thing to do for me is not to offer crypto. And this is why I don't offer crypto, because there's a lot of scams out there and you got to be extremely careful. But also it was a huge strong point for me because everyone that lost money, we've literally settled with, that they lost so much money. It was about $3.5 million and we settled for an undisclosed amount. And I was responsible for that undisclosed amount. But I'm here to say that it's actually a strength of mine. And I regret that I was in that situation, but also don't regret the results, the responsibility that it took. But I wanted to share that because we've gotten a few phone calls about people asking me about that, and I don't shy away from it. I podcast it about all the time. And then you hear all these scandals like with FTX and all these other things. Anyways, just wanted to clear the air on that. It's there, guys. It's there. And so investments have involved risks, and be extremely careful with crypto. Even J-Proof. Like, everybody's asking me about J-Proof and should I invest in it? Look, you only invest with money you're okay losing in. The problem with the clients back in 2020, they invested with money that they couldn't afford to lose. And that's why I take responsibility. because it was during COVID. I couldn't fly out and see any money managers. All the airports were locked down, even in Florida. And this is why I only practice safe money strategies. This is why I only do yellow and green money. I don't do red, even though I trade personally red money, and I'm pretty good at it. I enjoy it, especially when there's a market crash or if there's a lot of volatility. The VIX is extremely important, by the way, for trading and investing. So just be careful with that. And as you guys know, everything on this podcast is meant for information and education purposes only. I am a financial advisor, but I'm not giving financial advice on this podcast. Man, it's a mouthful. But if you are interested in getting financial advice, definitely give my firm a call, 813-448-3446. You can visit us at cortezwm.com. And also you can download a free guide on americafirstretirementplan.com. That way you can kind of see our philosophies. So many clients have called and said, Carlos, I never knew about red, yellow, and green. It makes so much sense. And my advisor never gave me this option. Well, the whole reason is because your advisor legit works for a company possibly that doesn't offer safe investments. And their version of safe investments are money in red money, like a stable fund full of equities and bonds, or even bonds. Like that's their version of safety. Just ask them, what's the definition of safety for you? What's the definition of safety? And you're going to get a lot of different answers. So, well, I'm actually going to go back to the studio and record the second half of this podcast, because I want to talk about the markets. I want to talk about volatility. I want to talk about what expect this week. It's very confusing what's happening. The Fed just dumped a lot of money to buy bonds, and it's going to affect the interest rates. I want to talk about interest rates. I want to give an update on TMF. And more importantly, guys, I want to show you how to make millions of dollars in your retirement. So stay tuned. After this break, I will be back in my studio.
Don't buy an annuity unless you know how to double your money within 4 to 6 years. I'm talking about no fees, principal protection. The market goes down, you lose nothing. You get an annual statement because your money's not invested in the stock market. It's only credited by the index. And what is the number one index that I can find? That's going to be the NASDAQ. That's going to be AI. That's going to be technology. That's going to be healthcare technology. What are you doing not investing in that? You want to be able to have access to a principal protected account with no fees that has complete growth. If we look at the actual index, if you look at the NASDAQ, in 08, NASDAQ was down 41%. We made 53% the following year, a 19%. A 2%, a 16%. In 01 and the .com bombs, we made 49, a 10, a 1. And so right now the NASDAQ is down. It's a great time to get in. When Trump got in 2016 to 2020, the NASDAQ yielded over 100%. You can now effectively get into the NASDAQ without risking your principal, have principal protection, have no annual fees, and get your gains locked in. This is not found in your mainstream broker. This is not found on Wall Street. As a former stockbroker, I wish I had access to this to my clients. Give us a call. We want to help you, and we can work with all 50 states. God bless. Hey guys, thanks for bearing with me there. I hope you enjoy that little walk and talk with the kids. I love doing that. I will probably be doing more of that coming here shortly. I hope you enjoyed that segment, just to walk and talk with the kids. It's always nice to see the kids. That's why we do all this, right? We work hard. We be intentional with the kids so that we can enjoy our times. At the end of the day, they grow up quick and they're out of the home. So, and honestly, like if you're a huge impact on your kid's life at that age, they'll remember that for the rest of their lives, so they can continue to carry the torch to their children and their children's children. My father did it with me. He spent a lot of time with me. He was such a huge impact, and still have an amazing godly example as a father. And I always will love him for that. So Anyways, I appreciate you guys watching us and bearing with maybe stability issues of the walk and talk. But I like doing it. I want to do it more. So it's not really financial related, and I like it. Speaking of financial related, holy cow, are you confused yet? Like, do you know what to do? Are you seeking the answers? Are you reaching out to your financial advisor saying, "Hey, what are we doing to embrace for a Fed? If a Fed lowers the interest rates or raise the interest rates?" Well, obviously, as you know, if the Fed lowers interest rates, it basically incentivize uh, businesses to borrow more, consumers to spend more, right? To take out credit card loans, to take out just loans in general, mortgages, obviously, buy homes, people will spend more money. If you raise interest rates, people will spend less, but it will help curb inflation. So he's in this little pickle domestically. Also, there's an international problem. So if they raise interest rates, obviously that affects our economy. If they lower interest rates, that affects our economy as well. But also, if they lower interest rates, now international markets will be buying, like the Japanese be buying our bonds all over again, and they own us. They would legit own us. So what did the Fed do? They secretly just bought $20 billion of our own treasuries right before the announcement not to do jack shizzle on May 7th. So we got 20 billion going in. And what this is pure market manipulations. I was in my trading group this morning and we were talking about what to do on the news announcements, because most traders like to trade the news, but a lot of traders stay out of it because it's very unpredictable. Well, if we're going at bat with Nolan Ryan in the 90s, you know he only has one pitch, and that was a fastball, right? But every now and then he'll throw a changeup. So here we are expecting the fastball, and a changeup shows up, a 65-mile-an-hour changeup. So we swing too early or we hesitate. Next thing you know, there's a strike. That's what the Fed just did right now. He's blaming the pause on Trump and tariffs, using that for a rate decision. And it's actually causing more panic, more uncertainty. And the Fed is always late to the ball game. I mean, it is pure manipulation at this point, guys. So we're going to look at the charts. And I told you about the bro investing. Like if you listen to Yahoo Finance and CNN and Fox Business, you're too late for the ball game. Like you should only read those things to see what the left or right or the woke media is saying, to only confirm what you believe. You have to do your own research or hire a professional that does the research for you. And you can give us a call. We're here to help. My number here is 813-448-3446. We would love to work with God-fearing patriots that love the cross, that loves America, but more importantly, that is all about their family and their faith and want to honor God with their money as well and their retirement, and not fund this woke agenda that we're in. So if that's you, give us a call. We want to help you, and we feel like we're led to help you. And you're the type of person we want to work with. Now, we work with everyone all across the states that believe in our message. The only place that I am very, very truthfully nervous is Hawaii because of the time difference. The banks only work 9 to 5 East Coast, and and it's like when they're waking up, we're actually going to bed. And obviously I can't work at 9 o'clock at night. But if you are in Hawaii, we'll still see if it's a great fit. Maybe you can communicate periodically, right? Virtually or email. But we want to work with you. So give us a shot. For my Canadian clients, just shoot us an email. We can work with most Canadians as long as they have an American bank that we can work with. So if you have a checking account here in America, typically we can help you on the green money side. And if you're in Australia, same deal. If you have an American bank, we can help you, but there is also a huge time difference there. So just email us. I may have, there are several advisors that I'm interviewing to make sure I'm doing my due diligence for Canada and for Australia. We've even had several clients in Europe reach out to us But we love it. We love being able to be a resource for you, as well as everybody here in America. And God bless you. But hey, if you haven't had a chance, definitely go to rumble.com and click on scriptures, or search Scriptures in Wall Street. Give us a like and a follow there. We're trying to build that channel up organically, not by bots or anything. So if you're listening to this, no matter what network you're on, I actually do more content on my Rumble channel. Just quick little videos, thoughts, driving with the car, showing family stuff, but really, because I only record twice a week. And there's a lot that happens on Monday, Wednesday, and Friday when I'm not recording. And I want to be able to share something, because my ADD will kick in and I'll forget, and I forget to talk about it, especially when clients want an answer on something or they're confused. For instance, I just spoke with a client out of Pennsylvania. I can't say names, but he has a CD and he also has a 401k. And I said, Mr. Client, how does it make you feel that you actually don't own your money? The money in the bank, you don't own. The checking account that you have, you don't own. And your 401k, you don't own. Here's the deal. You may get offended by that statement and you may bring out the pitchforks and coals and everything, but really call and ask, can you withdraw your money? Whether it's your CD, checking account, CD, bank, or 401k, if you got a few bucks in there, ask if you can withdraw everything. Some banks, if it's over $15,000, $20,000, they will tell you to come back tomorrow, or you need to make an appointment. And what that actually basically means is that when you sign on your new account agreement with the banks, you are actually relinquishing control to the bank, and they allow you as a beneficiary of the account to liquidate whenever they seem suitable. So this is why people say go with a big trusted bank, and this is why big banks are popular, because they're too big to fail, right? And so a bank literally has the right to stick their hands in your safe deposits as well as your checking account and take all your money if the bank is insolvent, because there's no more bank bailouts. Let me repeat that. There is no more bank bailouts anymore. The bank has a right to take your money if they are insolvent, and it's called a bank bail-in. You can look it up. It's under the Dodd-Frank Act of 2010. I've been saying that for years. This is not fear-mongering, guys. This is actually real. Now, this same type of language is in your 401k. When you are working with your 401k employer-sponsored program, your defined benefit plan, your defined contribution plan, you are not allowed to take your money out unless you're 59 and a half. And another provision is you are not allowed to take your money out and roll it to an IRA, typically till separation of employment, meaning you're retired or you got fired, even if you're 59 and a half. So we have clients that have been with their companies for 10, 15 years, and they're fully vested. They've reached 59 and a half. They are not able to roll their money out till they're fully retired. Now, you tell me, do you really own your money in that context? You have to abide by the rules of the plan. And it's scary because the markets will come back up, they'll rate back up, and they'll come right back down. Overall, we're in a negative quarter of GDP, first time in years. And if we get a second one of negative quarter in GDP, and now Yahoo is saying that because Trump got in, they got all their goods ordered in now, so they weren't able to produce and have gross GDP kicking in. I don't know if I believe that or not. I just think that we are due for a huge correction. And let's just see what boring Yahoo Finance has said.
For the third straight meeting, even as President Trump has hammered the central bank to cut rates. Officials say the economic outlook uncertainty around the economic outlook has increased further, even as they still see the economy having expanded at a solid pace, even as net exports really swung the economic data. Of course, first quarter GDP contracted for the first time in 3 years as importers rushed to import goods ahead of the president's tariffs. Now, officials expressed concern that the risks of higher unemployment and higher inflation have risen. But at the moment, policymakers still judge the labor market to be solid, saying that the unemployment rate has stabilized at a low level in recent months. Officials still see inflation as, quote, somewhat elevated. This decision was unanimous. However, Kansas City Fed President Jeff Schmid was not present for this meeting because of the death of his wife, and in his absence, Minneapolis Fed President Neil Kashkari voted. Guys?
Jennifer, thank you very much. Appreciate it. So not any surprise in terms of the decision to hold rates steady here. And I'm just starting to go through the statement itself to see what have been the changes here from the Federal Reserve. But obviously, the focus continues to be on the dual mandate and where we might start to see changes on those dual parts of the mandate in terms of employment and inflation.
And the truth is, Julie, as we were just talking about, so much of what happens next for the Fed and for the economy, it of course does rest with the president. I mean, what is President Trump's next move? Is he willing to really accept kind of worst case adverse economic scenario? Or is there some type of bright line in the sand where he's not willing to accept that? And then you would see some type of resolution on all the trade and tariff we discussed. That's the background.
Yeah, and we're going to go back to Jen for a moment. Jennifer Schomburger, what else are you noticing here from the statement?
Yeah, Julie, what was interesting to me is the Fed opted to hold rates steady. And the reason for that is they still view the economy and the job market as solid right now, inflation somewhat elevated. It's the risks to the outlook around their dual mandate that lays the question for the policy path forward, right? They see the risks for higher unemployment and for higher inflation now more elevated than they did previously. Uncertainty around the economic outlook has also increased further, but clearly looking at the hard data right now, everything looks okay, thus no move in rates.
Jen, thank you. Appreciate it.
So that is basically what they're saying. They're basically saying that the economy is looking fine and just really gazing over the fact that we just dropped $20 billion buying our own treasuries so that the other countries can't. And that they don't have to basically lower interest rates. I told you guys last year, I said, don't be surprised if the feds try to raise interest rates. I mean, I said it and I got laughed at. And I knew they would play this dog and pony show. So it's going to be interesting to see what really happens. I still like TMF. I still like the fact that they have to lower interest rates. I mean, at some point, they're going to have to lower interest rates. There's no way people can afford 7%, 7.5% mortgages. Even at 6 is terrible. It got as low as 6.8, but it shot right back over 7. And people, real estate is in a free for all down here in Florida. And I know it's trickling all over the United States. Agents, the average real estate agent hasn't sold a home in forever. Like, it is bad. If you look up statistics. So there's just not a lot of qualified buyers. And now the banks are mortgage brokers are hurting. I know a few mortgage brokers that are they're asking friends and family for money because they can't make ends meet, because no one has ability to have the credit score, the income, nor the capital to spend on a market that is terrible right now. So I want to look at the charts, but before I get started, please know that everything on this podcast is for education and information purposes only. I am a financial advisor. However, everything on this podcast should be taken as education information purposes only. If you would like a consultation or investment advice, give us a call, 813-448-3446. And I am more than happy to give you the advice that you need, give you a second opinion, ask questions, get curious about how we can help you. And, obviously your goals and what you want to do. All that is covered in our first consultation. We don't charge for for initial consultations. We actually don't charge at all for consultations. Once you hire us, we're able to work with you. And you have to engage with us. We have a formal engagement that we do. And we've been doing this for a while. So we want to make sure that you are getting your answers taken care of. More importantly, if you are confused about anything that we do, all you got to go is americafirstretirementplan.com, download a free guide, and really just ask yourself, how much do I have in red? How much do I have in green? How much do I have in yellow? And quite frankly, you may not even know how much you have in each color, and that's okay too. That's why that guide is there. We also have a book. You can request our book. All you got to do is give us a call, have a 15-minute conversation with us. I will gladly send you a copy of our America First Retirement Plan book. I wrote it for you. I wrote it for the people that would give it a gander and some time. No cost to you. I'll even sign it and ship it your way just for supporting and watching us. So I appreciate it. All I ask is for a like and subscribe on Rumble, and I'll send you a book as well. So there's a lot of cool things I'm doing, some merch that I'm working on that will be coming down the pipe. So we'll have T-shirts and some other cool stuff, and some giveaways for our call-ins. So a lot of neat things are coming out, and I just love this community. I love having the ability to talk with you guys and having the ability to really just talk about the charts and spread some scriptures at the end, right? So here's the Fed rates. This is a historical Fed rates. A chart here is pretty amazing. And obviously the rates have gone up. They were higher back in the 80s. Look how high these things were. Holy cow. Over 17, right? I'm sorry, over, what is that, 17 and 4 cents. Holy smokes. 17.04. Wow. So we had a death cross back in the late 80s, and rates came crashing down. And then it came crashing down, came right back up, crashing down. And look at this, came back up. Well, what do you think is going to happen next? You tell me. Look at the behavior of these interest rates. Came right back up, down, spiked back up, came crashing down, came back up in the late 90s, came crashing down in 04, 05, came spiked right back up in 2005 all the way up to 08. Slash those rates. Crazy. They just drop real nasty there. All the way back in 2015. Came back up. And 2020 started coming back down. 2021. And rates shot up and the bond market crashed, right? The bond market crashed right here in 23. As interest rates do climb up, the bonds go down. And so right now we're starting to see a light feather. My lights are turning yellow. Very, very possible it could turn green. We just need a little more momentum coming down, and we should see another massive drop off here with Fed rate interest rates coming down. So monetary policy is a big thing, guys. Monetary policy is a big thing. Just got to be on the lookout for it. Now, for those of you that have been following me for a while, you know how to take advantage of the interest rates is we're going to look at TMF. Again, this is not investment advice. This is simply education information purposes only. But I want you to understand that TMF is a leverage ETF. A leverage ETF. So we got a death cross back in May of 2022. And right now it hasn't been looking good from a profit standpoint, but it is setting up very, very nice where we could see this oscillator literally turn green. We were hoping that they lowered interest rates today, but we knew that they'll stay stagnant and twiddle their thumbs again. But once this actually starts to come down, the rates, this will come flying up. I'm talking flying. Right now, we're at 45.29 on TMF. And for those of you that know, this puppy was over 379 back during COVID. Could we ever see those highs again on TMF? Well, we need to lower these interest rates, and we'll definitely You know, I have a call option for those of you who've been following. I have a call option at 100. So anything over 100, we'll make a ton of money on just on a $3,000 call option in January 2026 call options. But I really think we could see prices in a 250 range realistically, as this oscillator signals a momentum shift. We'll start to see a momentum shift. Also, if the stock market crashes, TMF comes up. If interest rates go down, TMF comes up. So it has this double-edged sword, so to speak, where we win if the market crashes and we win if the interest rates get lowered. I really like that play. So TMF is a great safety harbor for someone that wants to make money off a market crash or lower interest rates. Again, only invest what you can afford to lose. You don't stick your whole retirement in this, guys. You only stick, it's red money. You only stick money that you can afford to lose. TMF could go to zero. It could go lower. That means interest rates are staying stagnant or they get higher. That is a risk here. But you be the judge. What your gut is telling you is the Fed trying to lower interest rates or they're trying to raise it. If you think it's going to get lowered, then this might be a great allocation for you, maybe for 10, 15% of your liquid assets. Nothing more than that. I always recommend having safe money. For those of you that don't know what green money is or safe money is, it's an account that is principal protected. You have the ability to track a NASDAQ. You have the ability to track a index, for instance, like the NASDAQ, and make all of the upside. Right now, there is an account with no fees, no bonus. You have access to 10% a year. You're going to be able to have access to the QQQs. And you've heard me talk about the Qs. One of my favorite ETFs to trade. And so if I go back in history, let's just say you bought this thing in 2008. This is so easy, guys. This is so easy to do now. Now that everything has been basically systemized for you. If we bought here, you never ever go down. You stay level. Every single year, you get all the interest at 100%. Still, you can get a lock in. Each year, you get a lock, annual point to point. And what happens is, market goes up, you go up. Market goes down here, you stay level and protected. So the market went down there, but your principal is protected all throughout. So having this feature of green money following an index, you never lose this principal. So if the market continues to go up, you go up. If the market goes down, you stay level. But your previous years are always locked in. If I can put like lock masters on them, I would, but I can't with the mouse. but yeah, you get the point. Your principal is guaranteed. It's protected. You can run it off the QQQs. Right now, we have an A-rated carrier in your state that has ability to grow your account 120%, depending on the state. Some are 100, some are 135. They got lowered from 135 to 125. So you want to act quickly. You want to give us a call as the stock market is going down and it's coming back up. So you want to be able to price in at a lower rate. Right now, we're still negative. We are still negative, guys. So we'll look at the NASDAQ here real quick. So what I'm saying, guys, is we are still negative in the NASDAQ. Even with this run up recently, we are still about 25% negative. It's crazy, right? We're still 25% negative. And I'll show you. I'm not just talking out of my you-know-what. So if I pan over to year-to-date, we are down 26.93. So right now, you can actually get into the NASDAQ. You can get into the NASDAQ and legit secure your lower costs at a discount in an index that's going to perform on average, what is it, over 17%? But the returns are ridiculous on a NASDAQ. So green money is going to have the ability to protect your principal. No fees, no annual cost. It's incredible. So you've heard me talk about this plenty of times. So in 2025, the NASDAQ is down negative 5%. That needs to be updated. 2024, 24%, and 2023 we have 53% that went up. Obviously, in 2022, the Nasdaq was down 32%. Of course, if you were in that green money account following the Nasdaq, you got a zero. You didn't lose anything on the reds. The following year, you made 26. You kept your interest. The following year before that, in 2020, you made 47.5. You kept your interest. In 2019, you kept your interest with 37.96. You kept your interest from your gains in 2017 of 31%. You didn't make anything. In 2018, you didn't lose anything. You got a zero. 2016, a 5, 8. If you have not been getting these returns, give us a call. Let's get your portfolio literally refinanced, reallocated to meet the current market conditions. Now, this isn't trading. This is for long-term investments. This is for that person that wants to secure their retirement, that wants to grow their asset, that doesn't want to pay a boatload of fees, that doesn't want the government to tell them what to do with their money, their state, or whoever. And when they pass away, they can give it to their spouse, they can give it to their loved ones, and they can continue the legacy of growing their asset for their retirement, or they can simply just start plucking money away. With these type of accounts, you can take 5 to 10% out a year and really not even touch your principal. It's that simple. So if you had $500,000 in this account, you could take out $35,000 to $45,000 a year and not even really touch your principal. It's amazing. I mean, you saw the returns. The returns are there. I mean, there's nothing for me to argue. Those are the returns. The Nasdaq is going to be the index for this decade. It is heavily vested in technology and in healthcare. And those are the two sectors that do well with any type of recession. And as we go into this recession, right, a negative quarter of GDP, another one, we have another negative quarter GDP, we have a full-blown recession. You know that we are already in a recession. You might as well protect your 401k and don't be a sit-in duck, guys. Like, your 401k is one of the worst investments. You don't know the fees. You can't control it. You have limited options. You call them when you're 59 and a half. Maybe, just maybe, you can roll it over into your own IRA, your self-directed IRA. And it's good to know before you even get to retirement. So that way you can kind of plan for your retirement, not at the leisure of your company. And that's what they want to do. They simply just want to force you to keep on working for their fixed dollar amount, whatever that is, so that you can say, you know what? I don't want to quit because I want my match. And now they got you by the carrot. It's a carrot in front of you and you're just walking towards it. So be careful, guys. A 401k is there to give you a false sense of security, in my opinion. You don't own it, and B, there's no principal protection. You're actually responsible for any losses in your 401k. The employer, through the Dodd-Frank Act, relinquished employers to assume responsibility of your 401k. There's a lot of complaints and arguments in 2008. Well, my employer did not notify me that the market was going down or teach me how to safeguard my investments inside of a 401k. And so that was a big breaking news on like my side of the world and my space, where I remember banks getting sued with ERISA, and it was just not compliant. And a lot of rules have changed since then. So no need to go through all that, guys. You have the option here of having green money solutions. You can go to greenmoneysolutions.com. Take a look at it. Let me know what you think. Some great stuff there. But more importantly, guys, I just wanted to say that the markets are going to be volatile. Real quick, let's look at the S&P. There's a little bit of quiet going on. Like, people are forgetting we are in a bearish market right now. We are in a bearish market. This is starting to trend back up. Look at my oscillators here. We're in a bearish market, guys. Don't forget that. Look at my oscillator here. You see this red dot? You see how this is all turning red on the very bottom, my traffic lights? yeah, we're getting ready to come back down. I told you so many times that this Blue Cross is nothing but a bear market rally. And if I pan out, you'll see it. Hang on, let me pan out. Let me pan out, guys. That's the S&P. Let's see here. S&P. So the S&P is continuing to rise, as you guys see. I also see a turnover happening here. We've reached this peak here, and it's looking like that it's losing momentum. You start to see this red trickle coming down, red stoplights. So you could see literally this thing coming down to its last point, and we could see a massive drop. Maybe not that drastic, but maybe to 3,400 around here. And they could test this, and Lord knows where it can go from there. There's a lot of stuff that's happening, but this will come down. This is an unusual rally. Volatility index has gotten to 24. It was 40 around this time frame. Just a little drop, the volatility index went up. But I said this was going to be a breather and it's going to come up. Well, it's coming up now. It's starting to reach its head fake. So that's the S&P, as you guys know. Let's look at the QQQs again, because that's pretty scary what happened here. So same exact thing. NASDAQ goes up, it drops, and it comes right back up. This is a massive classic head fake. Drops, comes over here. You see that little red speckle. My traffic lights are also turning red here. Momentum is starting to shift. So just be very careful. Don't get suckered and don't get bro invested into this trap. This is huge manipulation. Do not get involved in, hey, I want to buy high and sell lower. Don't do it. You'll see the market go up. It's safe to just be in fixed income and wait for this thing to come down back to its normal level. Maybe it hits 286. Maybe it comes down to here to 169 on the Qs, on the NASDAQ. But yeah, we're starting to see a loss of momentum. I would be very, very cautious of having an equity position right here. If you look at, let's see here, New York Stock Exchange, NYSE. That's the tick index. Let's look at the Dow. Same deal, guys. Boom, went down here back in 2010, shot up, and we saw a little meltdown in 2022, and we're starting to see a little meltdown now. And I have red all over. Red on my oscillator, red on my traffic lights, red on my predictor here. So we're going to see a market correction very soon here. Just be careful buying mutual funds right now. Your 401k, I'm telling you, again, not investment advice, but in my opinion, you should be in fixed income, and you should be getting ready for a bearish situation where markets are going to go down. Don't get fooled by the upwing. Good for you that you made some money back that you lost over here earlier this year. But yeah, they're saying, oh yeah, all the gains that were lost are now just made up. Guys, for every dollar you lose, you got to make $2 to get it back. So with green money, you don't have to worry about the volatility. Again, understand the difference between investment versus trading. I like to do both. I like to have investments that I can set it, forget it, but I also like the day trade and swing trade. I saw a comment the other day, which I appreciate. He said, oh, there's a lot of red flags and blah, blah. And, I like to trade 10 to 1. Yes, I do too on my swing trades. But when we're day trading, for those of you that have an interest, then there are certain charts that are different that we can get in and out of things. And I watch several markets, the futures, and particularly the gold, the NASDAQ, the S&P, the Dow, and crude oil. And so when I see a lot of shift here, I can pan over to my intraday swings and have the ability to look at what the markets are doing. So anyway, guys, I love all y'all. Don't forget to like and subscribe. And if you guys remember Mark 6:14, for if you forgive others their trespasses, your heavenly Father will also forgive you. But if you do not forgive others their trespasses, neither will your Father forgive your trespasses. I read that last time. I'm still marinating on that one because that junk is tough. Like, let's learn to forgive, right? Let's learn to forgive those people that have trespassed us, that have caught us. Also, the promises that we've broken to others, right? Raise your hand if you've broken a promise. Raise your hand if a promise was broken to you. I'm guilty on both ends. And so we have to learn to forgive. And I really wanted to marinate on that and just allow the Holy Spirit to conform my mind to his thinking so that I can be a better person for my parents, for my kids, for my wife, for my family, as a parent, for my children. And yeah, so for those of you that are wanting to know about Rachel, Rachel's doing good. I appreciate your prayers. We've been successfully going to brain balance and doing her neurological exercises, and her mood swings are leveling out. Is still there, but I just want to say thank you for your prayers, and also don't forget our sponsor, getmeleanusa.com. Go over there, get you lean, get you fit, get your mind right, get your health right, start losing some weight, get some focus in you, get some great sleep. All the peptides are doing amazing things. They're God First America. They're a God First America Second company that really loves the cross and really loves their products, and they're doing very well for many people. So get you a box. You can cancel anytime, subscription model, and it does help support the show. So I appreciate it, guys. I'm out of here. I can't wait for this weekend. We're going to go really, really big into the charts because I need to see what's going to happen this week. I have some things that I have cooking. For those of you that are trying to make some money in the markets, I got some ideas, of course, education purposes only, right? And give us a call. We want to help you with your retirement. Let's get together. Give us a call, 813-448-3446. If you're a client or if you have some questions or if you're just a viewer, you want to email me. I answer all the emails. info@cortezwm.com. info@cortezwm.com. If it's just to talk bad, or I had this one person that emailed me, oh my gosh, sell your gold and you're going to hell if you don't take my advice and blah, blah, blah. You can't have scriptures in Wall Street. What kind of idiotic name is that? And I'm like, lady, I'm glad you're offended, because before you look at the splinter on me, look at the log in your eye. So we get a lot of people that email us, and honestly, like, this show has saved people. This show has brought people to the book of life, has been an impact. So honestly, that's why I do it. I could care less about people's feelings. I honestly care about people accepting Jesus as their Lord and Savior, and having their money right, and having their family right, and having the best version of themselves, whatever that looks like. So I'll keep on pressing on. Promoting Jesus. We don't preach hate here. We want to love our neighbor. We want to love our wife, love Christ, love the church, and we want to forgive our trespasses. That doesn't mean being a wussy. That doesn't mean lacking your masculinity. That means being a warrior and being steadfast. God bless you guys. I'm out of here. We'll talk soon. Bye-bye.